Silver had another 8% up day, and I'm looking at a possible short put at around strike 45, but only after January 9th, because we have some economic data, the unemployment rates, and this news can be either bullish for a rate cut or not, and if they are, then we have a possible short put position that I might be opening on silver. Copper is basically not tradable until there are any tariff announcements. I think the Trump administration, they mentioned they will look at possibly revisit copper tariffs. So up until then, I am not touching copper whatsoever. Natural gas is another possible buying opportunity at the end of the winter, because the price has been going down pretty hard. The average temperatures in the US were below expectation, or below average, I guess, and the demand has not met the supply. So supply is pretty massive and not much demand currently for natural gas. Now corn is another cool position that I might be opening, possibly as a short strangle, but only after January 12th, because we have the WSDA report. And this is basically the World Agriculture Supply and Demand estimations. So this report should show us the 2025 sales and exports for all of the grains, and from there we might see something or not see something. It depends. So it might create some volatility. Now this is a website I use for the weather forecast, for the average weather forecast in the US for natural gas, and it looks something like that. So I'll usually go to the 8 to the 14-day average temperature. You can see where it's gray, it's basically near normal, near average. And when it's anything orange or yellow or orange-ish, it's above normal. So the current outlook is somewhat neutral, a little bit above the average, which means not much demand for natural gas. Now for the volatility, we have decent volatility with gold. It's not really high. I would ideally want to see volatility, if you look at the 3-month volatility, at least over 24, maybe even the 25 mark over here, and obviously it's not there yet. Copper, as we know, really high volatility, but it's out of limits for now, at least for me. Silver is also pretty much pretty high volatility, and now we have natural gas, which is, even though volatility went down, it's still pretty high. But for me, it's another volatility play. It's going to be a play to buy the commodity itself. Now we have wheat, which also has a very good volatility, relatively, or not a very good, but it's pretty good. It's getting closer to the upper half of this range. And we have corn, which actually has an excellent volatility, as you can see right here. So these are the products. We have gold, silver, and the reason I'm looking at the 45, possibly maybe 46 strike, is because this is below the previous lows, where the price has had some kind of consolidation in the last few months. Otherwise, it's been just kind of going up, consolidating, and then going up again like crazy. So this is potentially what I'm going to be looking at. We'll see what kind of credit I can get and where price is, or where price is at, and depending what kind of news we get for the unemployment rate. If it goes up, the unemployment rate, we might see silver going up more and more again. The thing is, there's no reason for the price to kind of crash down at this point. It may be just profit taking, but there's no reason for it to reverse everything it did. Same goes for gold, and possibly same for copper. As you can see, copper is basically a new all-time high, which is quite crazy. But this is what happened last time when they announced they will be looking at tariffs for copper. Price went up, and then when they announced the actual tariffs on copper, price went down like 20%. Right, so it's kind of a similar situation here. I don't know what's going to happen, so this is why I don't want to have any positions. I'll wait until there are any tariff announcements on copper, and then I will reevaluate any positions. Now for natural gas, like I mentioned, I'm waiting for price to basically keep dropping down, and then we can just buy it very cheaply and sell calls against it and keep rolling the calls up and out. If price reverses aggressively against us, which would be again a pretty good way to keep making money for basically forever, because you can keep selling these calls forever. You have the asset, which can potentially double in price, and you have the short calls, which will keep making you money regardless, and you have no risk on the short call side. Now wheat also has somewhat an okay volatility, which will put it in blue. So everything in green is excellent. In blue it's somewhat okay. We have gold and wheat, which is okay. I don't know exactly what to do with it. Volatility is still, I guess, not good enough for me to even consider it, but we'll keep an eye on it. And corn, like I said, is very, 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 very good for a short strangle. There's the skew for the call and put side is pretty much non-existent, and you can see prices have been moving sideways quite nicely. So we'll see what's going to happen after the report on January 12th, then see if we have a good opportunity to sell a strangle for corn. So this is it. If you have any questions, let me know. Keep me posted of my thoughts every day, basically. And we have a lot of volatility to begin the year, which is good for us. We might find some really nice opportunities and get a really nice return. So thank you again. If you have any questions, let me know, and I will catch you in the next one.